Hello and welcome to FE Explains. I'm Roshan Povaya. The Lok Sabha has passed the updated Income Tax Bill 2025. It's not just an amendment, it's a complete overhaul of the old Income Tax Act from 1961. Introduced in February this year, the bill was referred to a select committee who have made 285 recommendations and almost all of them have been incorporated in the new revised bill. Let's point out the key highlights for you, that's you, the taxpayer. And at the end of this video, let me clarify the tax slabs again, as there appears to be some confusion for many who are trying to file taxes this year. Okay, before that, some good news for those who are retiring. The bill has extended the tax benefits of the popular National Pension Scheme or NPS to the Unified Pension Scheme. This means that up to 60% of your accumulated pension corpus can now be withdrawn completely tax-free at the time of your retirement. What's more, this deduction has been extended to non-employees as well. Now, for the corrections and the clarifications in the bill. The government fixed a couple of important issues that benefit every taxpayer. First, tax refunds. The new bill has removed a problematic clause that could have prevented you from claiming a tax refund if you filed your income tax return after the deadline. So this is a huge relief as it maintains the existing legal position and ensures you can still get your refund even with a belated return filing. The bill also clarifies that you can still get a nil TDS certificate if you don't have any tax liability. Second is relief for homeowners. This is a big one. The bill has removed the tax on notional rent for vacant houses, which was a point of confusion and financial burden for many people. It also clarifies that the 30% standard deduction for house property will be calculated after deducting municipal taxes, which is a major benefit for those of you who have rented out their properties. The third is on education and on dividends. For students studying abroad, there's good news. The bill clarifies that there will be nil tax collected at source, that's TCS, on remittances sent for educational purposes, provided they are financed by a financial institution. For companies, the bill also reintroduces a crucial deduction which is under Section 80M on intercorporate dividends, which benefits companies that have opted for the concessional tax regime. However, there are much stricter and clearer rules for searches and raids now, especially for search and seizure operations that's in our digital age. The bill introduces a new concept of a virtual digital space. This gives tax authorities the power to access information from a wide range of digital accounts during raids, which includes emails, social media accounts, online investment, trading, banking platforms, and even from remote or cloud servers. Crucially, the bill clarifies that tax officers can bypass passwords to access this information. However, the government has also made a very important correction to address a major concern. When performing a block assessment during a raid, the law will now use the term total undisclosed income instead of the broader total income. This is a significant change, ensuring that only previously undisclosed income and not income that you've already reported is subject to the penalties of a raid. You see, the new bill is more than just a list of changes. It's a modern tax law for a digital age. A very important change. It replaces the confusing concept of previous year and assessment year with a single clear tax year. The bill now has 536 sections from 819 earlier. It also gets 16 schedules arranged cleanly to reduce litigation and make the law, of course, easier to read, understand, and implement. The government has also given the CBDT more power to make rules that adapt to our fast-paced digital world. That said, now let me clarify that this bill comes into effect from 1st April 2026. Yes, for tax year 2025-26, these changes will apply from next April. Now, let me address the tax slabs confusion. In February, Finance Minister Nirmala Sitharaman offered even more incentives for people to join the new tax regime by changing the slabs and the rates. However, those revised rates will apply for the income that you are getting from April 2025 onwards, not for the tax that you're filing right now, which is for last year. that is 2024-25. Just to clarify, under the new tax regime, the revised slabs are 0 to 4 lakhs, no tax, 4 to 8 lakhs, 5%, 8 to 12 lakhs, 10%, 12 to 16 lakhs, 15%, 16 to 20 lakhs, 20%, 20 to 24 lakhs, 25%, and above 24 lakhs, it's 30%. But this slab is applicable only on income from this year. So while you are currently filing taxes, if you have opted for the new tax regime, the older slab still applies. These are the rates of 0 to 3 lakhs, no tax, 3 to 7 lakhs, 5%, 7 lakhs to 10 lakhs, 10%, 10 lakhs to 12 lakhs, 15%, 12 lakhs to 15 lakhs, 20%, and above 15 lakhs, 30% tax. Also, in the revised new tax regime for this year's income, the rebate available under Section 87A means that anyone earning up to 12 lakhs has zero tax liability. However, keep in mind, right now you are filing tax for last year's income, like I told you, which means the rebate was only applicable for income up to 7 lakh rupees. That said, the last date for filing income tax return has been extended from 31st July to 15th September 2025. I hope you found this information useful. Follow financialexpress.com for more clarity on taxes. Got any queries? Please add them in the comments below, and please share this video with your friends.